Hello, and welcome to our Friday edition of CMS Forex News. I'm market analyst Nick Nassad. Today is November 7, 2008. German exports increased slightly in November following 2 months of declines, which helped exports increase 6.9% on the year. Imports were also up, rising 0.9% on the month, putting imports 14.1% higher on an annual basis. In actual values and not percent changes, exports grew more than imports, helping to widen the trade surplus to 15 billion euros, which beat forecasts. Industrial production in Germany fell 3.6% in September, the largest decline in 14 years. That decrease wiped away the growth in August and undershot economists' expectations. Earlier in the week, factory orders from Germany were shown to be down 8%, so this week number is consistent with that data. German companies are facing the pressures of weaker demand both at home and abroad as the global economy contracts in the face of the credit crisis. European stocks rose today, taking some of the sting out of bruising midweek losses, which has been pressuring the euro versus the yen. Weak news from the US dampened the rally but was unable to derail it. The euro-yen pair tested its support at the 123 level overnight to start the global session, which was the lowest pair it had been this week. The rest of today's trading saw the pair climb and settle in the 125 area after hitting a high of 126.40. The pound-yen pair bounced off its line of resistance at 151.15, continuing to trade in a downward channel started late last week. Today's gains came on a return of risk appetite overnight and, despite weak U.S. data, gained during the New York session as well. From low to high, the move amounted to more than 400 pips. The U.S. economy shed another 240,000 jobs in October, undershooting economists' forecasts and bringing the unemployment rate up to 6.5% from September's 6.1%. That unemployment rate is a 14-year high. Even worse, the figure for September was revised sharply down, going from a decline of 159,000 to 284,000. The 2 months together equal almost 500,000 jobs and is the biggest 2-month slide since 2001. Also in the U.S., pending home sales reversed some of their gains from August, as sales were down 4.6% in September. Still, the year-over-year figure remained positive for a second straight month, which may mean that there is some stabilization in the market. On the downside, tight credit conditions and deteriorating economic conditions continue to take their toll on the housing market. Wholesale inventories in the U.S. edged down by 0.1%, while wholesale sales declined 1.5%, pushing the inventory to sales ratio up to 1.12 from 1.10. The economic slowdown is hurting sales, and firms are looking to shed their stockpiles. The dollar-yen pair had been consolidating around the 97.30 level for most of the overnight session. Following the non-farm payroll release, the dollar hit an intraday low near 96.90, but as U.S. stocks traded in the green, the dollar rose 130 pips to set a high near 98.50. The employment situation in Canada is not as dire as it is in the U.S. After large gains in September, the Canadian economy in October was expected to shed jobs. Instead, there was a slight increase driven by full-time work, which offset losses in part-time work. Also, the unemployment rate edged up due to an increase in the number of job seekers that entered the labor force. After 2 days of gains for the U.S. dollar-Canadian dollar pair as a result of risk aversion, today's trading saw the pair fall 300 pips from the 1.20 level to the 1.17 level. Most of these gains following the better-than-expected jobs report from Canada and the weak jobs report from the U.S. After setting an intraday low, the greenback regained about half of its fall and is set to close about 200 pips lower than where it started the week. Next week starts with data on home loans from Australia, producer prices from the UK, housing starts from Canada, and the ZEW Economic Sentiment Index from Germany and the Eurozone. Later in the week, we get retail sales data from the US, which is expected to show another month of weak spending. And that ends this week in the Forex markets. Thank you for joining us here at CMSFX.com and have a great weekend.